Hello and welcome to Digital Accounting Education, a channel that strives to make accounting and EMS easy for you to understand. Please don't forget to subscribe to the channel and comment down below what other topics you'd like to see from me next. So let us get into today's lesson. Today we are doing a trial balance. So this is a question from a past paper. I have done a video on the trial balance where I was just teaching the trial balance format. So you can check it out. The link will be down below in the description box. So in today's lesson, it says the following trial balance has been extracted from the books of Savoy traders. The bookkeeper has fallen ill and the owner, Joy Savoy, is struggling to complete the trial balance for the month of February 2024. Required to use the additional information provided below to assist you to complete the trial balance for Savoy traders for the month ended February 2024. So information that you are given is the trial balance of Savoy traders for 2024 February and the additional information that you must not forget to read. So whenever you are doing the trial balance, if you can see, a trial balance has a debit side and the credit side. So whenever you have to deal with the debit side and the credit side, you must make use of the dead click principle. It helps you not to get confused on what amounts to debit and on what amounts to credit. So just to explain briefly the dead click principle, it says dead click. Okay, so the dead just says you're going to debit all expenses, all your assets, and all your drawings. Okay, and then with the click, you're going to credit all your liabilities, your incomes, and capital. Okay, so all these totals in the trial balance, you are just going to make sure that if it is an expense, an asset, or drawings, you're going to debit the amount, and then you're going to credit your liabilities, your incomes, and your capital. Hopefully this helps you. Okay, so the first thing that you're going to do, make sure that you know what goes into your balance sheet account section. So what goes into the balance sheet account section will be your owner's equity account. Only the two of them, which will be capital, your drawings, and then you're also going to put in your assets, your liabilities as well. And then in the nominal account section, you are going to put all your incomes and your expenses. Okay, so let us look at our trial balance that has been given to us. So if you look at your capital, there is no amount for capital, which means they will give you additional information on how to get your capital amount. And then we have other accounts that already have the amounts in the trial balance. So let us just get straight into our additional information to see what they are saying. So the first additional information says the owner's capital contribution at the beginning of January was 120,000. She had increased her capital contribution to 140,000. You must remember that in our trial balance, we are looking for the balances of each account. So you must not try to find the difference of this capital contribution because we are looking for the amount of capital the business would have at the end of February 2024. So the capital was increased from 120 to 140, meaning at the end of February, we would have 140,000 worth of capital. So this 140 is what you take to your trial balance. So in your trial balance, remember the click abbreviation or the dead click. The reason why I'm saying click is because capital falls under the abbreviation click. Okay, and remember your click says you must credit all of your liabilities, your incomes, as well as your capital. So it means your 140 for capital would have to go to the credit side. The second additional information says, to date, the owner had taken 8,000 cash for personal use. So whenever you see this term personal use, just know that it is drawing, because drawings refer to any amount or stock that the owner would take for personal use. So in the trial balance that has been given to us, we don't have any drawings amount. So we have to go to our trial balance in the answer sheet and add our drawings. So just underneath our capital, you would add your drawings. So using the date click principle again, your drawings falls under the date, right? And date stands for debit all your expenses, your assets, as well as drawings, meaning your drawing amount will be debited. The next additional information says the business uses a markup of 33 and a third percent on all sales transaction. Okay, so please note that if the business uses a markup percentage on sale, you use a different formula to the one that you would use when you calculate or when the business uses markup on cost. So here's the formula for when you're using the markup on sale. So to get your selling price, you're going to say cost multiplied by 100 divided by 100 minus the markup percentage, and then you will get your selling price. So now let us use the markup percentage that has been given to us. Okay, so this markup percentage that has been given to us, we are going to use it either to calculate the cost of sale or the sale. So when you look at your trial balance, we are given a cost of sale already, which means now we have to calculate our sales. So using our formula, we are looking for the sale, right, which is the selling price of the goods that we sold. So we are going to say the cost price of 75,000 multiplied by 100 divided by 100 minus 33 and a third, because that is our markup percentage, right? So the first thing that you're going to do, you can just simplify it for yourself. 75,000 multiplied by 100 divided by 100 minus 0,333333. So this is how you're going to see it on your calculator if you just put in 33 and a third. So you can put it in your calculator like that and you will get 112,500. So this is our sale amount. So our sale is obviously in the nominal account section, because I said nominal account section, you put in your incomes and your expenses. And we know that our sale is an income, and our incomes are also in the click abbreviation, which means now you have to credit your income amount. So 112,500. The last one says an amount of 2,200 for stationery was excluded from sundry expenses. So here they are telling us that in this business, they include stationery in their sundry expenses. So they did not include it this time around, which means we must include it. So you go into your trial balance and you're going to say sundry expenses of 2,050 plus 2,200 of the stationery. And this would give you 4,250. And sundry expense is an expense, which means it falls under the date. So you debit your expenses. Okay, so your 4,250 will be debited. So now that was our last additional information. So whatever accounts that did not have any adjustments to them, you're just going to take them and you put them in the trial balance. So now I don't want you to just take these amounts and transfer them onto the debit side of your trial balance. Well, there's nothing wrong with this one in particular, but in some cases, they might put the amount of vehicles or of whatever asset on the credit side. And just because it did not have any adjustment, you would take it and you put it on the credit side of your trial balance, which would be wrong. So just be careful of that. Make sure that you transfer the amounts onto the correct side of your trial balance, in case they would want to confuse you or want to see if you know your story. So your vehicles, your trading stock, debtors control, and bank are all assets. And we said all your assets will be debited. 75,000 for vehicles, 27,500 for trading stock, 15,250 for your data's control, 55,975 for your bank. And then you go to your cost of sales. It's an expense. It has to be on the debit side, 75,000. And then your rent income. They did not give us a rent income. We know that our incomes are supposed to be on the credit side because you have to credit them. So we will see that later. And then we have wages. Wages are given to us. And then sundry expenses we calculated. Okay. So now we are only missing our rent income. And the rest we have. So if you look at your debit side, you have every single amount on your debit side. So you add up all the amounts on your debit side. You can open your calculator. I've done my calculations already. 275,975. So 275,975. So trial balance, you already know that it has to balance. So your balance on the debit side and your balance on the credit side must be the same. So rent income, we have no amount given to us. There was nothing in the additional information, which means it will be a balancing figure. So you're just going to transfer your debit balance onto your credit side. So 275,975. And then you are going to subtract the two amounts that you have on your credit side. 275,975 minus 140,000 minus 112,500. 23,475. So here's your trial balance. It balances. If you add the credit side, it will give you the total that you have down there. I hope you enjoyed this lesson, and most of all, I hope you understood. See you in my next one. Bye.